people tell you to diversify your portfolio. They say, well, you need to put something in a stock here and a bond there and a bit of FX there. But to me, that is diluting your edge. If you've got a strategy that wins all the time, why do you want to diversify it? So preference function is basically telling you to put, your winners, go with your winners, build up that side of things. It's like, don't diversify. If you've got 5 different markets that are winning, go with the winners, because you're going to get a better return than you are diversifying out. But if you're trading them on a daily time frame, they might be very correlated. But if you took the S&P 500 on the daily and the FTSE 100 in the 30-minute, they're completely uncorrelated. So I might build up an optimal portfolio around different time frame of assets as well. So you're in the same market, but actually the behavior in the different time frames is different as well.
So on the topic of mental models, building a strategy, I wonder, could we very quickly run through a kind of a Renko strategy for people listening?
All right, so if I'm going to start right from now, I'm going to think.
Welcome back to the Unpacking the Markets podcast. Now, before we kick off, can I please ask you to subscribe to this channel so that we can continue to grow and help traders worldwide? Let's get into it. Basically, you were so good at designing trading strategies, it allowed you to retire in your 30s. Before you design a trading strategy, what's the first question you ask yourself?
I don't know, I think I might be blessed with a set of skills that allow me to come up with ideas. But I suppose the first thing is I'm always looking for ideas. And I'm always thinking, can something be turned into a strategy? So I might see a news event or a certain stock, or even looking at a chart. So, and then it sort of raises some sort of, inclination to investigate further into it. And it's like in my head, I think it's got an edge, to it. I think I can see it as potential, whether it works or not, that idea. So that's where I actually start, and then I'll go away like a mad professor and start building and scratching around. And so ideas come from all over the place. I might be watching the sports on the TV, golf or something like that, and see a trend in the world of golf. Everyone's using a certain club or driver. What does that mean? Or when you switch to electric cars, so what are they made of? Lithium, batteries. Where does lithium come from? Okay, so lithium, all right. So where does that get mined? Who produces it? Then I'll go away and look at the moving parts, work out where I think I can, turn it into a trading strategy, and then start the build. Another recent one, social media scanning. Work with tech companies to turn their data into trading type signals. Some people approach me with ideas that I can turn into stuff. But back in the trading days, I was at commodity companies, and you take the fundamentals underneath the how the oil market works, or grains or whatever, how it's shipped around, mined. There's so many. My mind, I suppose, is a constant buzz, of idea thinking and generation, and that's where it starts. So when I work for Coke Industries, we're always told to be smart thinking outside the box on anything, and we were allowed to buy books on anything we want, research on anything we want, and I think it was honed there, the skills on coming up with the strategy ideas, looking and listening at other people. Other trader might be doing it a certain way. Could you do it better? Can you optimize it and make it better? So the idea might already be there, but you could see how you can improve it and get a better edge. There's no like starting point as such. It will just say, right, an idea is there. Can it be exploited?
Yeah. It sounds like an open mind is the first.
Yeah, exactly. Yeah, don't rule anything out. Yeah. I might be speaking to a doctor or a dentist who knows about a new drug, coming to the market soon, or I wouldn't say it's inside information because that's illegal, but it's all out there knowledge, and that you can just see that can turn into an executable plan. That's trading.
And when you say sometimes you're watching a bit of price action post a news event, so would you essentially, maybe CPI would come out, or you might be watching NASDAQ futures, and you see some kind of pattern that you would think, how can I exploit this? Or how would you approach it then if you see a certain pattern? What would you do?
Yeah, so going back years and years when I first watched those type news events, I called it like a heartbeat monitor. So, you come into the thing, it's flat, then it goes down, spike, up and down. So it's saying, that seems to happen on most major news events. So you find the serious ones, you then start to model that type of stuff. How far does it move? What does it do in the the time period? Does it bounce back? Does the previous trend mean anything to where it's going to go to afterwards? Should I stay out of that period altogether? And are the odds more in my favor 5 minutes after the event in the trend direction it's going to take? So it's a case of modeling. I suppose my background also quantitative program, all that sort of thing as well, so that helps me do the modeling part of it. But it's then you've got to then work out whether you've seen a snapshot of time, what does that repeat itself historically, and then you've got to forward test it, and there's a whole process that you get into around that. But you're quite right. I've got strategies around certain news events. When they announce the interest rates in the US, maybe the half hour later, it's when Powell that stands up and is more important than the actual numbers half an hour before. What happens when he speaks, and what markets are best as well to trade in. It's not just is it euro dollar, is it the NASDAQ 100, it's not just a case of seeing on chart what's the best market to trade on, or do you need multiple markets? Or is sizing and scaling more important to the trade? So it's not just the entry and the exit, it's how you build the trade up. When's the optimal time to get out? There's thousands of variables that go into it, and I think of it like a horse race. You start out the gates, it's getting to the end. You could jump the hurdles on the way through, but it's getting the horse to the finish line. And getting to the finish lines, the trade management and risk management, and that can be equally as important to the trade idea as the first looking at the CPI news and seeing the spike in the data, and it's all right having an idea how you're going to execute it and make money out of it. So lots of variables.
That's interesting, because obviously, but we have the idea and even the strategy, but in the trade management, obviously, I guess as a kind of quant person, I guess you're always thinking about probability. So during the trade, are you also not just saying, this is my entry, this is my exit, but would you also think about, well, what's the probability of, if we're here, that we're going to go here, and then maybe you'd scale in to a trade?
Correct. Yeah. Some of my biggest heroes in trading are people like Edward Thorpe. Don't know whether you heard of him. That the sort of people that took the science and put it to casinos and trading. So game theory is massive in my world of thinking. So I'm constantly thinking of statistics and odds and probability of success. And then when certain things are playing out, like I say, you can add to the trade, take the trade off, manipulate it to an outcome. And then, of course, you always monitor that data and statistics to see what you get at the end of the line, seeing if that approach works. And if it doesn't work, then how do you refine, constantly refining to keep the edge there.
Yeah, just as you're talking, it reminds me of when I had Tom Basso on and I asked him why most traders lose money, that kind of classic question. And he said, because most traders haven't heard of what we had in chemical engineering called process engineering. And just listening to you talk about, I guess, the process of observing to get ideas, and then, then trying to build a process around it and define that edge, and then kind of rinse and repeating or improving that process. It really reminded me of him.
Yeah, so in Coke, when we were there, we called it mental modeling. And it's that same thing, taking the idea, almost like a business plan. You know, if you wanted to get a loan for a new business idea from your bank manager, you know, you're not just going to go up to him and say, I've got this idea, I think it's going to make money. You've got to prove it out from start to finish. And it's that process is the mental modeling. It's taking the idea and presenting it as a full package, you know, trading solution. And it's not just like, say, getting in the trade, you know, it's all those other moving parts to, you know, get you a result.
Yeah. And when you, I guess, went to design your current system, did you do a mental model for that system as well?
Yeah, I would. I suppose if I'm serious about an idea, I instantly go into the mental modeling process. Everything's documented. They're like mini business plans. I don't just go straight into trading it just because I think it might work. I'm afraid it's my way of doing it. I just have to do the science, the thinking, you know, the quantitative, qualitative stuff behind it. And when I'm happy, then I release it.
So within your mental model / business plan, you have all of the statistics of that strategy already defined as well?
Yeah, so because also it helps you massively with the trading psychology side as well. If you know you've got a 70% win rate and you're looking for a 2 to, I'm making these numbers up, 2 to 1 risk return, then when you're in that zone and you're losing trades, you're not bothered because you know what the back test said, and you're measuring, you know, forward as well to see whether you're keeping in line with the back test. If you are, then you just got to let the system do its job.
Very good. And one thing that comes to mind, probably a critique on my own approach, is the lack of, well, I'm currently learning Pine script at the moment to try and, I mean, this is on the side of, so quite basic. It's, I didn't kind of want to go and do a full-fledged Python course, if I'm honest. So on the side of the discretionary kind of macro type trading plus technical analysis, I kind of group it in that way. Also, I find the systematic kind of futures trading quite interesting, but actually quantifying things for someone that had no skills right now, what would be a kind of good approach for them to be able to start quantifying some of the strategies that they're thinking up?
Yeah, so as you know, I run the YouTube channel, and that's the sort of question you get from someone who hasn't got that, you know, IT maths background. It's like, where do you start? So I always tell them start from the coin toss. It's 50-50 to start with in trading. It's either going to win or lose. And then you add on elements to push the odds, you know, the edge more in your favor. And if you can't do all that hard back testing, then what we also had was, call it like a soft launch. So instead of risking 1% per trade, you like risk 0.1% per trade for a period of 3 months, 6 months, until you've got enough data to draw, you know, the conclusions that, you know, this works, it doesn't work, or in that period, you know, that soft launch period, you refine the model until it does work. So that's what I'd always say, you know, never go full guns in because you can wipe your account, you know, quite quickly if you do, because often you've only looked at a small period of data, or you just looked at a couple of trades that look really hot. But actually, when it's about consistency over a longer time frame. So you've got to give the strategy a chance to work and work properly. So that's what I would suggest. If you've got nothing there, then think of it starting from 50-50, and then you've got to build yourself up some practical data through pretty much live trading. I would say live over demo trading, because live you learn more about how it actually works, because demo you'll go away and not really care about, you know, the actual detail. It doesn't really matter. But even if you've got a small amount in the game, you know, you'll learn faster and develop your systems faster by that. So that's why I see there's nothing wrong with demo trading, but People get stuck in there, and so I would go live with a small amount if I was starting from like no quantitative or IT programming type of background.
Yeah. And then I guess, is there without having to become maybe a reasonably competent Python developer, is there a way to kind of gather hard statistics about your strategy? I'm trying to think of the right way to phrase this, but a kind of beginner approach to gathering statistics or building some backtests.
Yeah, I think there's enough software out there now. The world's a different place from when I started 30 years ago. Even if you're using like MT5, like I've done a few videos on there's something called EA Builder, where you can build a strategy in technical analysis, plug it into MT5, pick the market you want, the time frames, and you'll come with a backtest set of data. All the stats you want. You can do it in you're doing PineScript. You can build simple strategies in PineScript. You can even do another thing, ChatGPT. You can get that to write your PineScript code, put that in, and you'll get back a set of backtest data. There's a lot of like I say, software out there, and not that expensive, that you can get your hands on these days to give yourself some hard historical facts and data and results. So you just got to spend a bit of time finding it. Like everything, you want to be good at it. You got to put in the hours. It's not even if you want to play it, you got to do the research and the legwork. But there's loads of stuff out there.
Yeah, I definitely think you mentioned it helps your psychology, and I think that's a great point. Just in terms of when I spoke to Rob Carver, I brought up the topic of backtesting, and he's obviously a big systematic guy, and I was asking from the perspective of, does this strategy work? Does it make money? And then he was like, well, that's not really why you would do a backtest. You do it to understand how the strategy behaves, or how it changes over time or a period. And post that, I feel like, I guess I realized I didn't have that many statistics around my approach. It was kind of like eyeballing it, a bit of live testing. But then in live testing, I think you have to be sure that you're not tweaking, or I find, say, if during the week one strategy said to get short euro dollar futures, but on the FX macro side of it, I was long euro dollar, which got stopped out, and but that immediately took me away from the euro dollar trade. That made money if it was to get short systematically, but my opinion, got in the middle of it.
And that's one of the hard bits of trading and successful trading. You've got to clear the mind of all that and let your idea do its thing. Otherwise, you're only cheating yourself and your idea. You want to become a successful trader, there's some hard psychological knocks and work you got to do on yourself to even the fully systematized trading systems, the algorithmic ones, even they are. I've seen those guys tinkering and like saying the bosses put pressure on them to get a certain set of results. It's not quite there. They start trying to change the code and stuff to catch up. It all turns messy. Even right to the you think the most clean cut algorithmic approach, people still think it's human nature, human bias on there. It's a hard thing to master, but you can help yourself by having the stats. That's how I work anyway. If I know what I should be looking for, it gives me the confidence then to hit the fire button to trade. Takes away a bit of that self-doubt. If it's telling me to go short and you go short, you might have seen something on the news that counters that, but it's your system. You just got to go short. You've got to do it and live by the consequences. If your system's right, it's going to work and you're going to make money. So hard.
It is hard. But we did talk before this, before we went on, about spotting frauds and different people in the industry. And I think one thing that you've just reminded me of is anyone that I guess speaks as if they know the market. You know, I know I've seen you might be familiar with the inner circle trader, who's this big.
ICT stuff, yeah.
Yes, that's right. Which is a massive phenomenon with people, especially newer traders, younger traders, and that's what they flock to. And for me,
Yep,
you know, the way he speaks, the way he speaks is like, you know, this is what these market makers are doing, as if I know.
They know.
I think that
nobody knows.
Yeah, and
I
it's
can
that
tell
kind
you,
of thinking.
I never knew when I was sitting on a desk. So how they know is
Yeah, and you could probably see the flow if you were a market maker, you know. So even then,
well, in commodities markets, when I was a market maker, you know, and much smaller markets than a lot of them out there, then so I did see some of it, but it's still very difficult. You know, you're still second guessing a lot of the time, and that. So so how some guy with a £10,000 account knows, then good luck. But the principles of that, you know, like I also told you, I'm never going to criticize someone's system. If it works, it makes money for them, fine. But don't criticize other people and tell them they're rubbish, you know, because you put, you know, if they're making money from it, let them get on. You know, it works for them. It's good. You know, I have no problem with that. Whatever it is, whether it's fundamentals, technicals, quantitative. Like I said, you know, counting the pigs flying past your window. If you make money from that strategy, I don't care. You know, it works. So what? So it makes money. Don't criticize. But there are some stuff like talking about the frauds that, you know, I look at it and go, that's going to be hard to work. I'd be interested to. Always quite interested to have a go at some of these ideas to you know, test them out and see them. But again, even that one, the ICT one's basically technical analysis anyway, just reworded into some flowery type of approach that sounds very good and salesy. But you know, if he makes money from it, then all well and good. But you know,
yeah, I mean, I think he's a polarizing figure, so to speak. But I do agree that I think there's some valid things in there in terms of just observing price action and how it can tend to behave. Doesn't mean you know why it's behaving that way, but
But to me, that approach is it's too much screen watching and too much discretion, and you know, it's not my style of trading, so I'm not really interested in it. But if it works for them, fair play.
Someone hopefully,
but I'm sure for many it doesn't work because it's quite a tricky one to master.
Didn't work for me, full disclosure. I mean, when I was on my, I'd say that kind of side quest that is looking for these
holy grail.
Yes, exactly. It's like a universal truth, and everyone relates to it, you know, because everyone, maybe not you.
No, I've been looking
because
for
you started working.
I'm still looking. Still looking for it. It's the one that gives you 100% win rate with the huge risk return on every trade. That's the holy grail, and I haven't found it yet. If I had, I probably wouldn't be talking to you right now. I'd be on my yacht in the south of France or something like that, doing that. So.
Yeah, I'd be talking to your PA and not trying to get through to you.
Yeah.
But because I found I think just broadly having an objective is something I didn't really come with as well. If your objective is to not be screen watching, I mean, I had a full-time job trying to do a methodology that takes, you know, a lot of time watching 1 to 5 minute charts, right? It's like impossible. But you mentioned you don't, I guess, screen watch, or you don't watch trades, or how do you monitor trades or execute them? Is it all systematic?
No, I'm old school, so I still like to trade for myself, but I also have stuff that's fully automated.
Okay.
So I've got a whole spectrum. And how do I monitor? Some of it is you would call screen watching, but most of my stuff produces signals anyway. So even at the lower end, I'm not having to watch the chart. So, you know, I can talk to you now. I can see out the corner of my eye, I'm getting like, you know, things popping up saying buy this and sell that, and do that, and that's the
P&L curve.
discretionary part. But but I try and get in there with I'll get a signal that says buy GBP USD, and I'll also have with that risk X amount on it. Put the stop here, the target's there. So all of that is taken out. So the most discretionary stuff is on the way to being quite systematic anyway. So I don't want to watch the screens all day anymore. So and that allows me also to cover a lot more markets as well, which in turn brings better returns in, because also try and come up with strategies, especially around technical analysis, that work in multi-market type environments. So it means I can make more money over 24 hours. So if I can automate it as much as possible and just be an administrator of the trading environment, then it gives you more time to do other stuff and come up with more ideas.
Yeah. Are you manually so the system will generate the idea, entry, exit kind of process, but are you the one that pushes the button to say, enter the trade, or is that
at one end yes, and at the other end no? Sometimes it's full through. API'd into whatever broker or whatever bit of tool I'm using to do that, because some of the strategies are far too fast for me to physically sit there and go type it in. But the slower ones, the more discretionary ones, the worst is I hit the buy and I hit the sell button, unless it's got like an order in to close it out or something like that. But getting in pretty much for some of them. And it comes in, say what percentage is my discretionary to fully automated. Comes in ebbs and flows as well. Sometimes I'm more automated, some I do just like also being a bit old school as well, and still hitting the buy and sell button, get the adrenaline going every now and again.
It's funny you say that, adrenaline. Having obviously you've been doing it for so long at such a high level that you still feel the emotions when you do it, because some people think it's when you get to a certain point you're like this kind of Zen monk and that you don't feel the emotion. But I've kind of realized over time the emotion is still there, but the person pushing the button is the kind of person that doesn't follow the emotion.
You're just honed like a machine over time, like 3 decades. I wanted to be a professional cricketer when I started, an injury and everything, it never happened. But I wanted to find a career that was as competitive as sports as possible, to give you that same sort of feeling. And that's why I went into financial markets and trading, because I couldn't be an accountant or something like that, because it just didn't get me going, I suppose, on the thing. And that's where but over time you learn so much that the emotional edge, and you might become robotic. So I see a lot of traders with different personalities. Some are very flamboyant, some are very quiet, some are quite geeky, but underneath there's that core to them where they, a good trader just process all the time. So they have different personalities, but executions. I suppose I'm quite robotic. Don't get too flustered, but it's nice to still have the feeling of being in the game. So
it's kind of like I think someone described it to me before, not in a trading context, in an emotional context. He said something like, you always want to be between a 7 and a 3. You never want to be a 9 or a 1, right? That's when things start going off the rails.
Exactly. So it's probably to be successful in the longer term, you've got to be quite consistent and robotic in your trading. So despite whatever personality, that's what you've got to get. Like I say, you'll be consistent, like I say, between that 3 and 7 or whatever number you're in, and you just got to roll that out over time if you want to be successful. And that, again, going back to the YouTube frauds, are probably very good at doing that for a month. But if I set them down and see their results 10 years later, see what they've got, most people over the longer term not going to make it past a year successfully. So Doing it for 2 years, 3 years, 5 years, 10 years, 20 years, that's hard. So, and that's when you've got to be very business-like and, I say, consistent in what you do.
Yeah, that's really struck me when we've been talking about how much you see it as a business, or how kind of much of a business mindset you have around it, even from the very beginning of having a business plan, essentially that mental model. That's it's the same thing, and then the kind of rigorous discipline every day of implementing, right?
Yeah. Well, if you had your own business, you're monitoring the sales, the costs, on a daily basis. Where am I making money? Where do I need to spend on advertising? What's hot this month? What's not? And it's exactly the same in my mind in trading. So, and trading side, it's getting in the statistics to show you what you've been doing and coming up with new business ideas, new trading strategy ideas, and keeping the business going. Business. Charles Koch again at Koch analysed, and he actually went in and consulted for a lot of these big, top companies using his management approach, and looked into constantly evolving, the companies that worked. You look now back 100 years, how many companies 100 years ago are around today? There's not many there, and it's the same, in the world of trading. If you want that longevity, I think you've got to think of it like a business. I find that the easiest way to describe how to do it to someone like you who's watching me on YouTube and wants to start trading and get into it. Think of it like that. How would you run your business? How would you get funding? How would you, make a success of it? And it's the same. Are the odds on your side? Where's your edge? When you start, a restaurant in the high street, where's your edge? Are there 100 other restaurants on the high street, or are you the only one? If you're one of 100, why is yours different? Why do you stand out? And that's how I take it over to the world of trading. I suppose it's been conditioned to think like that.
But I think you're amongst the best traders I know, and all of the best people I've interviewed so far have all said something very similar about edge, as in it has to be the foundation, it has to be quantified. If you don't have it,
no point doing it.
You might walk away and go and find it and don't come back until you have it. So
find another thing to do. Go and get a job doing something else.
A cheaper hobby.
Because it can get expensive.
Yes.
If you get it wrong.
Yeah. And the other thing that came to mind was when you're talking about, I guess, just viewing it as a business, I think it can take a little bit of pressure off people to, to think that they should be this great trader when they start. And I talk about myself here, really, not really anyone else, but the pressure of when you start something, that you should understand the macro and you should understand why the market's doing what it's doing and all these things. And actually, if you have a system in place that generates something based on an edge, it takes all that pressure off yourself, or I found it takes it off me once I developed the system. And I said this morning, or as I said before we spoke, I do still get in the way sometimes, but it lets me be away from the signal, and the signal is just a signal. It's nothing personal in me thinking I'm right and all this stuff. It's just that is the signal. So
no, I agree. But when I first started, I hadn't a clue what I was doing. It was, you dropped in the deep end, and that's, back in the day, it wasn't training programs and they go there, you're on the desk, off you go, sort of thing. And it's a learning process, and it's where it's the smart thinkers maybe survive. Those ones that are a bit entrepreneurial in their mindset, survive, because you need to learn from your environment, the people around you, the other traders. Why are they successful? Why do their ideas work? What tools are people using? And over time, it took me years and years to get consistent. And you'd go off on what, for example, technical analysis. You might look at a candlestick chart. Now that's the bee's knees, and then it doesn't work. And then there's thousands of different avenues you could go off in technical analysis. But I found when I stumbled across Japanese charts like Renko and Kagi and line break, they suited my mindset and then I started adding them together with, Western type indicators and tools, and came up with, in the technical analysis side, strong strategies that gave me an edge. But it took me a long time to get there. Work for a Japanese investment bank where I first saw Renko charts, and I first looked at them and thought they look stupid. They don't make sense. But again, don't criticize what you see that's working. Investigate, either rule it in or out. I did. I was lucky I learned at that stage about that type of chart at a Japanese bank, and I took that forward. But that took me a few years to get there, and then start refining. And still, I'm always learning and refining, and you should never stop learning. There's always something new coming along, or different way you can get an edge, an easier edge, or better return. And so never stop. It's a constant learning curve.
Yeah. And when you say Renko, for example, kind of suited you or suited your mindset, what do you mean?
If I look at a candlestick chart, it looks all noisy and messy to me now. Where a Renko chart, it takes away that noise. I know it's like blocks, and some people, like they do on YouTube, they blast me and say it's all a load of rubbish and hocus pocus and it doesn't work, but it works for me. And actually on the YouTube channel, I built a system specifically over 1 year and tested it and got 300% return using just Renko charts to prove that it worked. And still you get criticised,
But and that was real funds and in real time, wasn't it? That 300%, which is incredible.
Yeah, but for me, those charts just appeal to me because I can see the trends, I can see the turning points, I can come up with strategy ideas far quicker using those charts than I can a candlestick chart. Just the way I am, and I found over time I'm more consistent using that type of chart than I was using all the traditional stuff. Again, people make money on the other stuff. I'm not going to say they're good or bad or whatever. If it works for you, fine. They just work for me, and I don't know. Maybe it's my mindset, how I think. I don't like the noise. I just like to see simple. A lot of my stuff's very simple when it comes to the end execution of it. I like it as least fussy as possible. You'll see strategies only make, for pure technical analysis. I'm looking now maybe 1 or 2 indicators on a Renko chart, but I've tested it and tweaked it and it works. Done all what we talked about before and get on with it. But they just work for me. They don't work for everyone. But with today's technology as well, they can be manipulated into countless strategies and ideas, and because they're reasonably new into, most people say, in Europe or the US or whatever, then I think there's an edge to be found naturally in an area. Technical analysis is a well documented, detailed, sector of trading and financial markets, but there's still edges to be found if you can look into the, like I say, it's looking into researching, finding things and thinking, well, that's got a possible use. If I had this and I put that on there and I changed this and I got in with this entry and trailed that, what return do I get? And does that work on this market? What's the right block size? How do you do that? And a lot Renko traditionally is on just tick data. I've added it now with time data. So I use Renko and time. So it's basically a more refined candlestick chart, a cleaner candlestick chart for me. And I've come up with Renko curves of time data to allow a better entry and exit point. So again, it's just taking what you have and making it your own. That's where my edge lies.
I can see the kind of mad scientist comment you made starting to, come together for me. I'm thinking,
my wife called me a mad professor. So, until recently, I did have a lot more hair, and I looked like a mad professor, but I've taken it all off. But yeah, because I just go away and think, it's like a scientist or an inventor.
Yeah,
coming up with the idea that works.
Yeah, I love that as well, because you mentioned people kind of can be abusive or kind of have nasty comments towards you online about this doesn't work, and it's with every person that ever comes out with a strategy or an opinion. Those people come out of the woodwork saying, this is stupid, and I think you said, it worked for me, and one thing I've noticed with lots of people that are successful is they have come up with their own strategy and they fully understand it. So they have some statistics like you, so they can gauge what the behavior is. And then the other thing is that they made it themselves, so they have kind of almost a full belief in it. Whereas when you take an out of the box system, when it starts going wrong, the wheels really start coming off, because then you don't know what's happening. All of a sudden the strategy is rubbish, and then you drop it, and then it was probably just about to get successful right when you dropped it or whatever, because you don't understand it.
I'd never recommend buying one of those I call black box systems, because they might work for a month or 2 months, like you say, but then when you've probably forked out a lot of money up front on them, and when it starts going wrong, what do? When the edge erodes, now, again, go back to Coke days, I suppose I won't mind me saying, we had a strategy, around about 4 o'clock in the afternoon on the oil trading side, that we noticed buying on a Friday. So we got in a few minutes before, everyone bought on a Friday, quietly, not raising flags, saying we, don't being greedy, going and buying big on the crude oil and taking the edge, because people were, it's a long weekend, Saturday, Sunday, people buying for the weekend, and we noticed that trend. But eventually that edge eroded, as more people cottoned on to the, saw the same thing. And it's the same with buying a black box system. It's never going to work unless it's constantly updated and refined. And if you can't, lift up the hood and look into how it works and change it to adapt to, the changing trading environment, then it's going to fail. You've got to constantly keep on top, and strategies do die as well, and you've got to move on to the next one. If you can't get an edge out of it, like we said earlier, it's like, if you've only got one strategy and you haven't got anything else, it's time to go and get a job and doing something different. So I'm not keen on buying black boxes. I always have to make my own. I wouldn't trust them. Again, that's my personality, and so I always have to know and understand how it works. And again, going back to these other people, they want a quick fix. Something given to them, off you go. You're going to be rich. If trading was that easy, there'd be so many people, in the city of London driving around in Lamborghinis and flying helicopters into work, and 90% of professional traders fail as much as retail traders. So the odds are against you when you start. So it's a difficult game. But
yes, it's interesting you add in the professionals there as well. That's something that's a famous stat, obviously, but I only ever associated with retail. But obviously,
when you think about the people that they start a trading career, they sit on the desk, they last a month, they've blown their account, they've failed, whatever. Or maybe they last a year. If you actually looked at all the people that came and went in that professional world, you'd see the same sort of numbers. There's only a few people that make it through 10, 20 years of a career in trading, and normally those guys have done pretty well to get there. Some might last, 2 or 3 years, make a fortune and withdraw from it, but I'd say most of them will be doing something different to what they originally started on.
Yeah. And because I guess kind of skyrocketed when you were working for institutions or companies, why do you think you were so successful, why do you think you were in that 10% of successful traders?
Good question. Right place, right time, part of it, but there's always an element of luck to where you get to. I was in commodities at that time, so that's when there's a big boom in China's taking off, and the right environment, but also the right companies that I worked at. Some of them I was frustrated in, but like at Coke, loved it there. It bred the environment that I could thrive in. So, there's a whole load of factors. Maybe my mindset and personality was right for it at the right time. It's a difficult one to pinpoint, but I've just continued on in the same way after leaving the call it the professional side, and I act in exactly the same way, as doing exactly the same processes. I might not have the same infrastructure and tools as an investment bank or a hedge fund or something like that, but again, technology's changed and it's easier to be a smaller shop than you were before. So it's a good question. A whole host of things. Personality, my sporting background, that competitive nature, you don't take the hard knocks. There is a willingness to learn and evolve. I did a master's degree part-time in the evening when I was at a German bank in my early days in quantitative finance. So I had a plan. I wanted to get somewhere. I knew these are the variables I needed. These are places where I needed to be, the markets I wanted to get into, and sort of aggressively push myself into that space. So I suppose it's the same in sports or acting or anything. If you want to get to where you want to have a plan from the start, I suppose I've always had a plan. I've had a plan from the start, what I wanted to do and what I wanted to achieve. So, and I still got more on the plan that I want to do and achieve. So, that's why I'm still doing what I'm doing.
Good. I think you named 3 or 4 things, but the last, having a plan, reminds me. A friend of mine said this to me recently. If you don't have a plan, you'll be assigned a plan. And it just came to mind there when you were speaking. I think it's so true. Unless you have something that you're willing to push towards or your own direction, you just get caught up drifting between things, and then time speeds on quite quickly.
It's very easy to drift in that work, but also underneath, I always wanted to be in control myself. So that's why I think I left the profession, call it the institutional side, and went by myself. Because I wanted to be in control. I wanted even more control over my strategies and what I did and the ideas I came up with, and go in different angles and avenues that I wanted to do. So that was always part of the plan. You always get to a point where you're at, and then you've created the freedom to do what you want.
Yeah. Back on your strategy, I wanted to ask, because it's the system as an overall process. Yes, there are Renko strategies. I guess I don't know if it's strategy or strategies across multiple markets again, but you also use, you mentioned gaming theory, right?
Yep.
So I guess what is gaming theory in the context of trading, and how do you use it?
In simple terms, probability and odds of winning, like in a casino. If you start from there, gaming theory can get very deep, quantitative in its nature, but at a simple level, I have this, call it gaming cloud over my trading, which I'm always thinking odds, probability, edge at all times. How I quantify that, go off in different tangents, but that's how I like to describe the game. So simple things like Kelly criterion is a formula developed for he developed it, even to win at casinos. But if you simply take your risk return and win loss ratio, stick that into the formula, it tells you how much to risk on a strategy or portfolio. That's a bit crude as a formula, so you have to refine that further into your. So then I start to build in how losing streaks to that, so I don't risk too much, so I can counter in in that. So it's adopting those type of sort of outside of trading theories into trading, and it makes a difference. I looked at why do some gamblers win, in casinos, and huge amount lose. What makes the winners do their stuff? So you can take those ideas, and put them into your training. That's what I'm going back right to the start when we're talking. It's smart thinking outside the box, not just getting into the trade with a chart going buy here and sell there. It's how can I make it much better? And I found that gaming theory and that thought process made my trading psychologically a lot easier, and it also gives you a quantifiable tool set to measure the strategy or an idea.
Yeah, it's interesting because as quantitative as you are, I feel like you're also very creative in that, whether it was your idea generation process, looking at multiple different just observations of things that could work, and then again just blank sheet of paper, or blank code editor, I guess, and seeing could this, if I did this and that, how would it work? And it sounds like it's the same with different concepts you bring in to kind of trade management.
I suppose it's right. There's a creativity to it. You wouldn't think so in such a mathematical, quantitative type subject, but it takes you back, I suppose, to that business owner type mentality. The CEO of a company, whether it's a Microsoft or a Tesla or whatever, they're probably quite creative as idea because they came up with the product. How they had developed that product. So same in trading. I suppose like the top hedge fund owners probably very similar. Renaissance. That type of place. Jim Simmons. He was a maths teacher who that was his edge and structure, and took a different approach to trading, which you could call creative, and probably one of the world's best. So you're right. I think there's an entrepreneurial side to it as well, that creative side that you need to embrace and bring on. Again, hard to recognize and find, but maybe that's another one of the ingredients that I've been lucky to have.
Yeah, and probably another one of the reasons why it's, everyone's kind of, I guess why edge is hard to find is that, to create an edge, it has to be quite something a little bit different, right? Because if everyone's doing the same thing and everyone is getting the same results, it's like your changes in the process might add the difference in performance.
I wouldn't say it's not being contrarian. It's doing it. It's not that type of mindset. It's just looking for gaps, niches, holes in ideas and things that you can see. Well, all you need is the odds 1% in your favour, over the long term, and you're going to win as long as you can manage that. So it's just looking for those little things that you can turn into something. And 3 decades of experience, you start to see quite a lot after a while.
It kind of reminds me more, I guess, entrepreneurial than contrarian when you mentioned finding gaps. But one other thing you mentioned in this system, and on the topic of creative concepts and applying different topics to trading, you mentioned something called a preference function when I heard you speak.
You have been listening to my stuff.
No, honestly, that was a real presentation that changed. I went off on stupid trails afterwards, but that was a really great presentation you gave. So
so that all comes down. When people tell you to diversify your portfolio, they say, well, you need to put something in a stock here and a bond there and a bit of FX there. But to me, that is diluting your edge. If you've got a strategy that wins all the time, why do you want to diversify it? So preference function is basically telling you to put your winners, go with your winners, build up that side of things. It's like, don't diversify. If you've got 5 different markets that are winning, go with the winners, because you're going to get a better return than you are on diversifying out. And if you've back tested it and optimized the portfolio, then what's your problem, sort of thing. So you can do another way I build a portfolio up is like the performance so you build, I don't know, 20 different assets, and the risk return sort of numbers to how much capital you've got to deploy on each of them. Then you just do a simple bit of linear algebra, and you say the ones that perform the least well, you allocate the lowest risk to, and the ones that perform the best, you give the biggest, allocate the biggest bit of risk to. And then you have that nice sort of line, side of a pyramid type return, where you are then maximizing the best performers in your portfolio. So that's sort of how I would describe preference function. And another thing we did at Coke, and why their returns were so big, is it's portfolio optimization, basically, and not diluting your returns just because you diversify. But again, if you are winning, why do you want to diversify out? So that's what I'm always, I suppose, why my returns have been higher, is because I think like that, and I scale up according to the ones that are doing best, and I don't nullify the portfolio that way. And just another thing that I've thrown in the mix of learning that, again, helps the overall results.
So when you say on that chart, so one strategy, 20 different markets, and then you essentially allocate the most to the markets that are performing the best.
Yeah.
Okay.
Yeah.
I just want to make sure that was
markets,
exactly. Not extra strategies.
I probably waffled around my explanation on that, but that is essentially it. And I don't go, well, these, I've got 20 markets, the 5 least perform, I'm still going to trade them, but I'm just not going to give them as much risk. But then over time, if you develop, those 5, they might get better. So you give them more risk too. They might get worse, and they drop off your process, and you bring in new assets. So again, it's a constant optimization process to get the best return. It's about managing the risk and return, maximizing, the return, minimizing the risk, and that's one way that I do that.
Yeah, and one point that came to my mind there was on correlation. So an idea I really liked, came across it a couple of months ago. I was always familiar with correlation, but the idea of taking multiple uncorrelated bets across different markets. Like, I'd rather be, or say today, we have US retail sales, or you've got the ECB rate decision today. I don't really want to be long or short euro dollar today, because I don't know what's going to happen. You've got a market moving event. But if I get a signal in gas or oil, then I'm happier to trade that market. I guess that's more volatility. But in those markets where you were finding the best performers, do you consider how correlated those markets might be to each other?
Yes. Yeah, I've got to correlate. Yeah. But what I also do on top of that is, as you know, being a technical analyst, is the same market moves in different trends, short, medium, long term. So something has a different correlation effect in the shorter term than it does to, say, a different market. Let's take an example. I don't know, the S&P 500 and the FTSE 100, right? You might be just trading those two, but if you're trading them on a daily time frame, they might be very correlated. But if you took the S&P 500 on the daily and the FTSE 100 in the 30-minute, they're completely uncorrelated. So I might build up an optimal portfolio around different time frame of assets as well. So you're in the same market, but actually the behavior in the different time frames is different as well. So It's another way round of doing it. So
I'd never considered that. That's really interesting. I think so. Same strategy, just measured on a different
exactly.
time.
You look at the screens; they got to be the same looking Renko, chart with the same indicators, but one might have a bigger block size, one might have a smaller block size. So you're getting different trends or reversals or breakouts because they're behaving differently within those different windows of time or whatever you want to call it. So then you can build a portfolio there as well. That's what I'm saying about going back earlier. It's constantly coming up with things and putting them all in to give you that optimal return.
Yeah, sorry, I'm a bit. I just think that's such a great idea. I think I lost what I was going to say. That that's because, as I said, I really like the idea of uncorrelated bets, but taking it across time frames is something I've never actually heard anyone say between assets. So I think that's really cool.
Because you look at the stock markets, really on a daily basis. There's not much difference than the DAX against the Nasdaq or the Nikkei 225. Maybe you get a bit of different correlation with the Chinese markets, maybe, but when they're all performing well, then the rest of the world follow suit. So really, you might as well just trade one of them if you're on that same candlestick daily time frame. Because there's not much of a difference there, and if you're just trading all of them, you're basically duplicating the same trade almost multiple times over and taking on more risks. So find different ways of trading those different markets, find different ideas inside, what happens differently in the Nikkei 225 than the S&P 500. There are different times of the day that work better, that sort of thinking.
Yeah, because I realized at first when I started trading FX, and I was, I don't know, long Aussie, long cable someday, and both trades worked well. And then I was like, well, it's the same. They both work well for the same reason, and that was, I don't want to say it was a stupid realization, but it was pretty obvious. It's a dollar move, and that everything is kind of hooked on the dollar. Even the crosses, to a certain extent, it's all dollar based. So a dollar move will move all of your positions in a certain way.
So you might as well try get the dollar index futures contract and trade that, which is a basket of, I know it's heavily weighted to the euro and maybe a bit of the yen, but essentially it's the dollar play mostly because that's the major currency there. So you're right, But you as you learn, you find these things out, and hopefully you change and adapt.
And hopefully, you had a small account when you were doing it.
You still got something left to play with.
Exactly. Yeah. But you mentioned block size for Renko, and I kind of want to get into Renko a little bit because, as we said before this started, you are Mr. Renko globally. Right?
Apparently so.
I think
so.
The global authority, in my opinion, and I think a lot of people's opinions on Renko. So on the topic of mental models building a strategy, I wonder, could we very quickly run through a kind of a Renko strategy for people listening? Because I know you give out a lot of strategies on your YouTube channel.
Yeah, if you go on to, and again, I will get blasted on YouTube channel. The stuff that I put up, what I want to do on the YouTube channel is give my stuff away for free, and people think I'm scamming them by doing that. I don't get any money off the back of them, but a lot of the stuff that's on those videos is actually stuff that I really do use, and I'm putting it out there because you're saying about thinking like the way I do the videos is saying about coming up with ideas. I'll be sitting there and going, well, what if I did this indicator with that? What results would I get? I'll just test that, and I'll put that in a YouTube video, put it out there. And then when I say it's a 70% win ratio and you look for a risk return of maybe 0.5 to 1 or something, so I'm going, oh, that'll never work. No. But you're talking rubbish. But it does, because that's what the stuff I'm putting out there is actually real world stuff, unlike a lot of the channel. So I'm trying to educate for that side because it's free and it's out there anyway, and if you're keen enough to adopt it, then you can take something from it yourself. But Renko charts, you wanted to build a strategy from scratch, on the Renko
Yeah,
chart.
I'm thinking. Yeah, I'm gonna have to call it the Tom Basso challenge or something, because it's from his book. He's a complete trading strategy.
Yeah.
And I was, before this call, I was just noting, objectives, block size, things like this that I think would be interesting to see you in action in a way.
All right. So if I'm going to start right from now, I'm going to think, how often do I want to trade in the day? Right. If I'm going to take a raw technical analysis chart, what's the purpose of it? Am I going to be scalping it? Am I going to be day trading it? Am I looking for swings in the price action, pullbacks, breakouts? What am I actually trying to achieve from the chart? Because that will help me refine the size of the Renko blocks. The smaller the blocks, the more action you get, the more signals you get. You obviously get more maybe whipsaws, change in direction. But again, that would be my first question: is what do I want to trade? Do I want 10 trades a day? And if I wanted 10 trades a day, am I going to win 7 out of 10 of them? What's the risk return on those? Am I going to be 1 for 1 risk return, 0.5 to 1, 2 to 1? And then I suppose I build from there. So then it's like, okay, so I've got my Renko chart. I'm going to be, let's say we're going to be wanting 10, 15 trades a day. I'm going to go, what market's good for consistent trends, to give you enough blocks to take profit over those 10 to 15 trades. So you look at the average true range of the market over the day. Does it move enough to give you those types of day? And then how small do the block sizes move to allow you to do that? And then when you get a block size and you can see that the blocks change too much, in either direction, there's too much inconsistency there, it might not be the market that you want to trade it in. So I might look at 20, 30 big markets, find the ones that it looks like it works in. And then it's, okay, so I'm looking for a trend type approach. Maybe the super trend indicator is good, but I want to time my way in better. So I'm going to add a stochastic indicator on that. So I'm capturing the trend, I'm capturing the turn in the market. But what happens if it goes flat and sideways? What happens then? I sort of need a filter over there to capture true trend moves. So I might add a band type thing that once the price is out of the band and the signals are lining up, I then will trade it. And then after I've got, I suppose, the raw setup, it then comes down to the trade management type stuff. Where do I put my stop? Do I need a stop even at all? Because if I'm just using signals, do I actually need a stop to go in there anyway? Because if you're, say, entering on the stochastic and exiting on the stochastic, or exiting on the change of another indicator, you don't actually need a stop in there if you're confident that your results, this is where the confidence of the back testing and stuff comes in. I'll probably put a safety stop in there anyway, and maybe I'd look at it and go, well, actually I'll use a trailing stop approach under the super trend line indicator, say.
Yes, and on that super trend, so I'm not familiar with that super trend indicator.
I've got a video on that on the channel. So
I'll link it in the description.
It's just a nice filter that shows obvious trends, but because Renko takes out that noise, it makes them really obvious. That's why I mentioned that one. It's an obvious trend creator, and it creates turning points. Other thing, the rule of collinearity I'm building in. I want my indicators not to be based off the same information. So remember, a block is open, high, low, close of data. So you can take different type blocks. You might want to use a closed block, which keeps it cleaner still. Open, high, close, if you're in small, makes it a bit noisier, but maybe a bit more accurate. So that's another factor. I'm just thinking off the top of my head. But another way, getting back into trade management, I might run a multi-process on it that I'll trail the stop, but if it moves to a certain risk return point, so it's got to 1-to-1 risk, I might then take off some of the trade, or I might trail it up to that point and then just say, well, I've got a free bet, I'll let it run. I've got a 1-to-1. I know I'll win 7 out of 10 trades. I'm happy with that. And that is not much more to it. Now, once you've defined that exact process, you found the market, you found the block size that you want. It's a case of going and doing it, and again, not tinkering. But again, I would be a bit more robust than that. I would have done a bit more back testing and analysis than just going back to the 50-50 thing I said, the coin toss. That's the wrong way around. Coin toss. Could start with small. You're confident. You've just eyeballed a chart, and it looks like you've done. It looks like it's well. You can just go small, 10% of what you were going to risk on the trade. Again, another factor in is what balance. What's your trading pot? How much you're going to risk per trade on it for the size of the position. Are you going to use something like Kelly criterion to scale up, because it again, going to the more optimal trade size type thing. If we're only using one market, then we haven't got our preference function idea quite as much at play there. But if you start bringing multi-markets, do some perform better than others? Yes, that's how I would start thinking. It'd be tinkering, but like I said, you see a lot of the ideas that I have on the YouTube channel. It's out there and thinking, and not just the getting in and getting out, the risk management, trade management side of it. I think that's massively important to the success of the trade, is that part of it. I find it easy to come up with the ins and outs. It's how do you get it to the out and make the money. That's the hard bit, and historically it's probably a more overlooked process. When you look at all the books and stuff out there, there's not a systematic rule set for trade management. There's so many different ways you can do it, and it's very easy to come up with different subjective approaches. So again, in that, I will try and be as objective as possible. So if I'm setting up that strategy from scratch, this is my rule set, I write it down, I'm going to stick with that rule set, and that's it. So, no, as I said, I don't know if that's your idea of coming up with a strategy on the fly, or how I think about it, but well, you haven't got through my questions yet. No, I'm joking. But you have passed the Tom Bassel challenge. But but I would say the trade management part of this is a really big theme that's come out of this conversation for me, because I just think it's never talked about. As you said, it doesn't seem to be that prevalent in how to treat it systematically in books. But it's really just, this is a strategy, this is your target. But so much can happen between, when we start the race to when we finish it. It's like lots of different things. I mean, we could be here in 2 weeks. Should you still be in the trade? Is it probability of it going to turn around now and things like that? Yeah, I think it's. And also, you can make far more money using an effective trade management approach, adding to the trade as it becomes more successful, taking off, all these type of things. You can have multiple signals. I build up trades, that idea there. I might build one unit of risk up on a super trend signal, and then I might add another bit of risk when the stochastic flags me up. So I might have 5 units of risk built up before I get out the trade, whereas someone who just comes in, puts one trade on, doesn't make half as much as what I do, because I've thought through the post. It's the boring part of trading, and it's why it's probably not thought of in as much, or talked about as much. But I think it's a crucial part of your longer term success, because there's so many secret little bits and tweaks you can do in that part that can make your original idea far more successful and profitable.
It's interesting. If you talk to me probably 2 or 3 months ago, I would have had a different answer, which is how this podcasting thing is going. And it's like I talked to someone who has a new idea. It's like, oh my God, my idea is shit now, and I need to change my idea or whatever. But one thing that I've found useful on the topic of scaling into trades is it kind of I was running a strategy on this one of these funded accounts after I spoke to Tom on this podcast, and give a basic kind of breakout type momentum strategy.
Mhm.
And it's pretty basic strategy. Get the signal on the daily, trend is up, try and do it across markets. And because the time horizon on those funded challenges is, it's a day trading thing, you only have that day. Yeah, it's basically buy the lows, or so whoever bought the low in the morning, whoever had the move up, that's where I set my entry. And one thing I've been testing recently is where I used to take some profit at 1 hour.
Yeah.
Now I just increase my risk by 50% at 1 hour, because it's quite a low hit rate. As in, it might be days I won't get filled at all. But when you do get filled, it's kind of a stop hunt type of entry. And then when they go, they have quite high risk to return. So scaling in, and I guess, as you said, leaning on that trade management part of the process has been much more successful than when I used to take profit at that point, just because that particular strategy is like that.
It can make a big difference to the results. Actually, talking about the funded trader side of things, I've noticed huge growth in that area. So I've actually, a new challenge I'm going to do on the YouTube channel is I'm going to actually take some of those tests, use the Renko charts, come up with specific Renko strategies for, like you said, that day trading, futures trading world. I'm going to put them out on the channel and see whether I can pass those tests and see what. It's another challenge that I think will be fun to see what happens. And how you can scale up, and I know there's restrictions, small drawdowns and loss limits, and that's something that's quite tough to succeed in that space. So it's another challenge I've seen that's grown. I think be entertaining for the channel.
Yeah, strikes me something that you would be a game you'd be drawn to winning. So it's just another type of game. Like we said at the start, it's like I mean, anyone can have, they have just set preconditions for the game, but depending on your approach, you can still win the game. You just have to design your approach in such a way that.
Exactly. And one of the videos I'm going to put out is, I saw a stat on that, and it's 90% of people taking those challenges lose. And I can bet my bottom dollar it's because they haven't planned it out and actually read what the rules of the game are and built a strategy that works around that. You can't go massive size. Maybe you've got to do smaller size with tighter stop. You've got to play that game and come out with your edge in there. So that's what I'm interested in, finding out what the edge is on that side, and then putting that back out there to say, well, you want to get into the 10%, you've got to start thinking like this on these challenges, not just going in thinking someone's going to give you a 200,000 account after a couple of days. They're not that stupid. They're not going to give you that for fun. So
honestly, I think one of the ones I'm on, it's a 150k account, but as you said, the maximum drawdown is 3%, right? So it's $4,500. If the maximum drawdown is $4,500, it doesn't matter if it's £1 million. And this is when I start to learn about free capital, or how much capital you actually have to work with. Is you have $4,500. People get so caught up in the.
Yeah, no point putting on a 10-lot trade in crude oil, and then you've got to work out, say, the volatility of it. What's the potential? There's no point. This strategy looks good, but what happens when you put it on and it reverses X amount and you wipe out your funded account, but then it goes on and wins? No, you can't do it at 10 lots. You've got to maybe do it at 2 lots or 1 lot, and take a bit longer time to achieve the pass on that evaluation test or whatever. So. Just again, common sense, a lot of it, and just stopping and thinking and building the plan, like we said.
Because it's funny. I had that a similar issue as my bet size was too big. It was I think it was just over 0.5%, and then it's not impossible that I have 3 of those 3 losing trades in a day if they all get
Yeah.
filled, and if they're uncorrelated. I mean, it's unlikely, but it did happen. And then you lose whatever it was, almost 2% or something in the day, which is, when your free capital is 3%, that's a lot to lose, right? I mean, I had some. Luckily, I had a number of winners, so it didn't go all the way back down or whatever. But it's just another consideration as you build the system is this restriction.
Sometimes some of my strategies lose 5 or 7 times in a row. But because I know that, I build that into the trade size. So if I was doing a challenge like that, I'd have to adjust accordingly to factor in that possible scenario. It's, again, knowing your stats, doing your homework, all makes your life as a trader a lot easier.
And you mentioned that stat that 90% of people fail on those challenges. I think it's actually an even smaller percentage that get to their first payout. So I think it's only another 1% then, or another. It's the 90% and then 90% fail to get the first payout. So it's even.
Surprised me.
Yeah. I guess psychologically, people, maybe they pass it, as you said, on the lucky winner, and then they have to repeat it.
But you've still got to continue. You've got a new game in front of you that you've got to adapt to, because then you get a live account, and you can only lose a certain amount of money before you get closed down. And how are you going to make consistent money over it becomes a job, How are you going to do it? So I'm not surprised that a lot of people either fail or give up, I'd imagine, at that point. Nice that you've passed the test, but you haven't made any money out of it. And that's what the thing is. It's not a fun thing to play with. It's there to make some money from. So it'll be interesting to see how I get on. See if I can get to the 1%.
I'm not going to bet against you anyway.
Put me under pressure now. I hope so. I like a bit of pressure.
Yeah. I'm sure I'm sure you'll use it and pass. Let's
hope so.
Yeah, but I'm looking forward to seeing those videos then, because it's such as you said, it's a massive part of the industry that's growing. A lot of people would be very interested in how you're approaching it. I think those videos can be quite popular.
Yeah, well, we'll see. Probably not, because I'm not driving around in a Lamborghini, hitting them and flying in on my helicopter.
You can write one.
And
you can borrow my one. But I had you mentioned there making your life a little bit easier, or statistics making your life easier. You have a quote that I really liked, and it's, "You've got to learn to lose, and lose properly. If you can do that, trading gets a lot easier."
Yes.
So I wanted to ask you, I guess, what does it mean to lose properly?
Yeah. So when I've been teaching people before, and they think you've got to win 9 times out of 10, 10 times out of 10 if you want to be a good trader. But actually, you can lose 8 times out of 10 and still be a good trader. And it's a lot of people would not be able to handle losing that 8 times out of 10. They don't understand why they've lost 8 times out of 10. They don't understand why they can win 2 times out of 10 and become a very good trader over the long term. And it's that understanding that you can lose and still win. And that's what I mean by lose properly, is know why you're losing. Don't get beat up about it. Don't get upset. It's all part of the plan. Your strategy says you win 2 times out of 10, but you've got a 5-to-1 risk return. So what? You are actually in the longer term winning. So if you can lose properly and you can handle those 8 out of 10 which are going to come along, possibly in a row, you can get in that mindset, then you'll become a better trader for it, because it means you're understanding your trading, understanding the results, understanding the mechanisms behind why you're getting to where you are, and if you want to be successful as a trader. So that's how I think you've got to, first of all, start. And it's not a bad thing if you start your trading journey and start losing to begin with, because those who go off and just win straight away, often get the ego going, and will blow up probably quite quick after that, because they get carried away. So sometimes it's not bad to start losing first, as long as you learn from your mistakes and then don't continue that. If you continue the same mistakes, then you shouldn't be doing it. But if you learn and put that into the process and learn, that's what I mean, learning to lose properly, then I think that massively changes your chances of success. Don't think you're going to win 10 out of 10. It doesn't happen. You can understand that you can win 2 out of 10 and be one of the world's best traders. So that's what I mean by that quote. And I try and tell people that to start with, but they still think that you've got to win every trade, and you don't.
It's weird. I mean, so many people told. I mean, thank you for that answer. It was really great. But I think trading is a bit strange in that, for some reason, me included, people need to go and learn their own lessons and don't listen enough to people when they're told the answer. It's like, fuck, how many answers was I told before I started that I went and didn't believe, even though I knew nothing, from someone that had been trading for 20 years, and then I knew better, and then you go off on this kind of journey of losing money for a while.
I can't remember the exact numbers on this one, but I was reading something about Roger Federer, the tennis player. I think I did a YouTube short on it, but he actually knew how many games he actually won, inside the sets. I think it was only something like 50-something%. So he's one of the best ever tennis players, to touch the earth, and he only has actually winning 50-odd% of his. And he knew the statistic because he said it in some speech. He said, "I only win on about 58% of the games I actually play, but the overall matches he's winning." But he knew that was his statistic. So he's obviously learned that he doesn't need to win every game to be the best tennis player on the planet. He's prepared that, there's going to be some games he's going to give up and lose and that. But overall, his mindset is he knows he's going to win. So that's another example from the worst. But I've got the numbers I've given you are probably wrong because I can't remember off the top of my head. But
that's all right.
It was another stat that I was thinking the same, in relation to that type of mindset. He knew he was going to lose certain stuff, but overall, look where he got.
Yeah, and I think when we get into the topic of losing, you get into kind of I guess, I wish everyone, was kind of the same in that we could all just lose and then learn from the outcome. But I feel when put people together and losing together, and different types of people take it quite badly, and they can, just, especially if you get that emotional, fire, you touch the flame, and then you run a mile and you never come back. So I think that's where we get into the little bit trickier on that side, where you not only have to come to terms with losing, but you personally have to accept that you've lost. And I've always found losing hard. I used to play.
I love playing sports, and I love winning, but it's something I've learned, and it helps. So probably makes me a more calm golfer as well. I hit that great shot and think I'm Tiger Woods, and then the next 80 shots are absolutely awful. Maybe I'm not throwing out the clubs and snapping them quite as often as I maybe used to.
I've never broken a club, but I will say I used to play a lot of table tennis, and I have lost and broken bats and trophies and things like that. So it's something. I think I was a little bit immature also as a teenager, but it's something that you need to get over, because you're gonna lose, especially if you're in the trading game.
And one of the skills of success in that, you need another thing to conquer.
Can you let people know where they can find you online, Stephen?
Yeah, sure. Start with the YouTube channel, at the Stop Hunter. People get confused with that. They think I'm the stock hunter sometimes.
All right.
But it's the stop, as in don't go hunter, as in the FX term. So the YouTube channel there, yes, come there, subscribe. Lots of stuff as we've discussed already on there. There's I put some playlists together of actual courses, so you can work your way through a Renko course on there, totally free. Even if you're starting trading as well, with all the risk management stuff, all the things we talked about, preference function and game theory, it's all in there. So YouTube channel is a good start. Website www.thestophunter.co.uk. If you want me to do your trading for you, got a MAM trading account, trade CFDs. That's called IGOX. So www.igox.co.uk for the website there. So yeah, you can find me. They're probably good enough places to start. And as you know, Colin, I'm out and about doing talks and presentations, and got some books coming out hopefully soon as well. And that, so you can find me, or like you say, just type in Mr. Renko. Now I know that.
Google Renko charts. You're the first person.
There you will see myself from there. But yeah, the Stop Hunter YouTube channel, because that's got email links through to get in touch with me as well on there. So probably that's the best place to start, and you'll see most of my news and goings on in there. And YouTube at the Stop Hunter.
Yeah, I can't echo that enough, because I think we have touched on almost every, probably, well, a lot of considerations. I'd say most considerations of the trading process. Yeah. And we've done it, some from a practical, some from a kind of theoretical perspective. Yeah. But in your YouTube, you have hours and hours of practical implementation of everything we've talked about.
There's hundreds of that. There's actually it's probably approaching 700 videos on there now. Wow. And if you did like the beginner's trading course all the way through, there's probably 70, 80 videos. There's, a starting technical analysis one that's 7 hours long. There's a Renko introduction. There's hundreds of hours of content on there that I've used for 30 years. I just put out there, and hopefully others can use as well. And we got a traders club off the side of that. If you really want to get into it, it's on a Facebook group. You link in through the channel, where people want to ask me lots of questions. I find it hard to get back to them all on the YouTube thing, but inside the club, ask me what you like. We have live webinars and sessions, and ask me about Renko, and I'll put ideas out there and what I think of the markets and that sort of thing. So that's new on YouTube. So it's only been out a month or so. So something hopefully will grow like a community of fellow Renki. Is that what you call them? Renki traders, Renkais? Hello, Renkais.
I think you're in the place to make up a word related to
Renko. I can call it what I want, can't I?
Yeah, exactly. But you're right. I can't echo that enough, that if you're watching a lifestyle marketer now talk about FX or talk about futures, just step away from the screen, and it's an amazing place to start, because although very humble, Stephen has like one of the best probably track records and proven results over the last few years that are in the hundreds of % consistently. So yeah, it's mad that you give it away for free, but just because it's free doesn't mean it's not valuable for people listening. So please do watch it, right?
Well, it's all about education and learning. Like we've probably said in this session, it's about, if you want to get good at it, you've got to give it 100 and something % and throw yourself into it, like you would at becoming a professional sportsman or actor or whatever profession. It's a profession, and if you want to succeed, you've got to do the hard work to get the good stuff. And I make most of my money from trading and stuff. And I told you about my kids challenged me to build a YouTube channel. So that's another, because I'm very competitive, I want to get my subscribers up and get one of those Google plaques so I can rub it in their faces and say, you were wrong, kids. So that's why I throw it out there as well. So it's there for whoever wants to use it. If you want to use it, fair enough. If you don't, we don't have to.
Yeah, awesome. Stephen, thank you so much for all your time. I really appreciate it. And
cool. Thank you for having me on. Hope people find it useful and enjoy it. Thank you, Cole.